Good morning, NYSE pre-market futures gap open down. Most of these are related to the earnings season. CEO's a big gap down again. ESI a gap down at 559. CLB, WDC. So these are some of the listed names. VMware is gapping down after, boy, what a nice quarter that they had. But they continue their gap down on the NYSE. So this is the gap down list, and their earnings are related. Okay, earnings season related. On the gap open up though, you got MHS, you got SFN. So there's some good spots on some of these gaps. So we'll watch the broader NYSE gaps, and these are, you got Cleveland Cliffs or CL up in there, up $1.10. So David Beard can trade that. Goldman Sachs, no, not Goldman Sachs, but DEO is up $1.14. The AstraZeneca is up $1.41. And we're going to have to find out about MHS up 1138, see if there's any M&A activity going on. So what will end up happening is that we have the broader future market going up. The leaders like the CMGs that are very manipulative stocks, those will be sold short up off of the highs. We're going to be watching what wind does, and we're going to see where the pullback is going to hold support levels in this run. So we have a good gap up in the indexes, but individual equities that are tied to the earnings, with the ones that are coming out and blowing out the quarters and doing well, are selling off into resistance. And when they pull back, normally they'll pull back and buy the rumor, sell the news. So the trade management is going to remain selling short at the higher end of the gap. There's no buyers up there. Now the mechanical part of it is how the bear and the bull fight goes. So when things do start to go up, we would be looking for the short sellers of the last couple 2 or 3 days since the beginning of the week. Where do the stocks that had the best earnings start to hit those support levels, and trading those for the long side is the key. Okay? That's how this trade management is going to be set up, is that a lot of them have come down and tried to make markets at their lower level, Google being one. It pulled back, closed at 595.35. Apple, with its blowout quarter, selling short all the way down in pre-market the other day at $405. Yesterday's high was only $396. That will shoot up off the bottom. We'll look at some intraday call contracts and see exactly what kind of pricing is there, so we can trade that when it wants to make its move. So the leadership that did well, that has sold down in the earnings, there's nothing wrong with those reports, is how are they going to act and behave at those support levels, and where do they put in their consolidations and then tick up, and we'll see if the big money comes in. So NYSE does have a good gap open. Trade management will remain the same. We will be monitoring the S&P 500 and that Dow outside of technology. So technology's reported well in the earnings, but they've been selling it down. So we'll take a look at the diversified sector rotation and the AD line, advances versus decliners, and how these names here will end up acting on the opening gap in the NYSE. Gap open down, once again, is all related to earnings. So these gap up and gap downs that we're experiencing and recording here and looking at it, it's all earnings related on the NYSE, with a bull gap on the opening bell.